Are payday loans fixed or variable? These are questions that the payday loan industry is beginning to struggle with. And with more competition, it's only getting harder for them to find answers to these questions. To those who think that the answer is, variable rate is better, some of them would reply, that's true, but if your rates are variable you can just change them whenever you want. It's true that a lot of customers are on fixed rates and can't change them anytime they want. They may have bad credit, but there's no way they can get lower interest rates because they have bad credit. When a person has to borrow money from a payday loan company, you can imagine that their bad credit history can really hold them back. This is why payday loans industry is having a tough time with this question. It's because they can't compete with the massive amounts of competition online and in the classifieds. But do variable interest rates really make it easier for customers to pay off their loans? No, because you still have to make timely payments. People who apply for a fixed-rate payday loan will have to come up with at least 20% of their income as a deposit to cover the entire loan. So this is the reason why consumer protection laws were implemented. They're all for the purpose of preventing predatory lending practices. So how can you tell if a payday loan company is doing this? There are two ways you can check by using your credit score and your previous credit history. By using your credit score, you can see if you have bad credit. It's an estimate of your credit worthiness based on the information that's in your credit report. If you have bad credit, it's best to avoid payday loans. The good news is that as long as you pay your debts on time, you will be able to restore your credit score. As a matter of fact, you won't have to worry about your credit score ever again. Even if you don't have a credit score, you still need to pay off your payday loans. In this case, the best thing you can do is apply for a credit card, because your personal spending will be monitored. If you have multiple credit cards, you can check each one of them for late payments. Credit score is a very important tool when it comes to shopping around for payday loans. If you don't have it, you may consider looking for a free credit report from the 3 major credit bureaus. You'll be able to check your credit score, which will give you a clearer picture of your credit worthiness. This can help you determine whether you are getting a fair deal or not. Are payday loans fixed or variable? It all depends on the business that you work for, your credit history, and the interest rate you're applying for.